Good evening, everybody. Hope everybody's having a nice, fun December evening. It appears as if there's going to be a snowstorm coming this way to Pittsburgh. So 39 degrees in Katy, Texas, so I'm not missing a whole lot. I think it's warmer up here. All right, tonight we've got the honor, once again, to have Hubert Centers with us. I love Hubert's trading style because he's taken trading to the hilt where you basically put together your own trading strategy so you understand it and you make it your own. That way you're not having to depend on anybody else's criteria or their trading style. You basically formulate it so it's a good trading style for you. So with that, Hubert, welcome again to the Candlestick Forum. We're anxious to see what tidbits you can give us tonight.
Thank you, sir. Thank you, Stephen. Hope you feel better. Get well soon. All right, so we're going to do something a little bit different tonight, if you guys will allow me. I've got this course that I call Cloud Charting Secrets. And a lot of times I'm usually like going out and teaching like my favorite trades and stuff, but I thought it'd be really cool for you, since you are probably a candlestick fan. Everybody in here, first let me just check audio. I just want to do this really quick because sometimes Omnovi and my computer will get to fighting, and we just sometimes got to fix it a little bit. So if you can hear me, just give me a visual yes. So here's what I'm going to do. I'm not going to teach you the whole class, but what I'm going to try to do is I'm going to try to expose you a lot with a teleprompter software. If you will, just let me know. Answer this question, if you can answer this question. Can you see me writing on the screen? Hopefully you can. All right, so that's good. Fours. Got a lot of fours. Means you can add. That's awesome. ES. That's the wrong. Oh, no. All right, cool. So everybody can see. That's great. All right. We're going to have some fun tonight. I'm not really the guy that I can't, like, boring. I'm in, like, middle school here. Yes or no? Right? So if you're not using candlesticks, you're kind of already screwed from the get-go, right? You're probably just using ugly old bar charts, right? So this technique that I'm going to show you tonight, it relies heavily on candlesticks. So if you do not have a knowledge of candlesticks, if you don't know what a hanging man or a doji or bearish engulfing and stuff like that, and make sure that you learn what candlesticks are. Because you've got to have a foundation of candlesticks in order for this to work. Make sense? And I figured it'd be a real good compliment because I'm going to know most of you. If you're following Stephen's work, obviously you're a huge fan of candlesticks, right? So let's get started. I call this my secret weapon. And let me see. Here, I got to make sure that the slides are working. All right. I don't want to get in trouble with the NFA or the CFTC. And plus, I like to sleep at night, so I have to first give you a disclaimer. Disclaimer. Heads up, you're probably going to lose all your money trying to learn how to trade. Does everybody understand? I have the best disclaimer in the business. What I try to do is I try to scare you to death so that you take nothing out of context, all right? Past performance is not indicative of future gains. Some of the stuff I'm going to be talking about is hypothetical. Some of it's where I'm taking my actual real account and showing you what's going on. So I want to make sure that you understand that if you try to trade, if you don't know what you're doing, it's probably going to turn out horribly wrong. And if you know what you're doing, it's probably going to turn out horribly wrong, right? So it's probably going to turn out like an old country song where your wife leaves you, your kids hate you, your dog dies, and they repossess your vehicle. So if you understand and you agree that this is for big boys and big girls, and you should only, okay, you got to have more than a few there. All right, cool. Now, I will get sidetracked if you ask me a lot of questions as I go through this information, okay? And I got a lot of slides to get through. So if you'll just hold off your questions, just write them down. I'll stay until the last question is asked, okay? Until I get the last question and I answer it. But if you ask me while I'm going through the presentation, I'll get in a little rabbit hole and we'll be here for 2 hours, and I don't want to do you that way, okay? So at the end of the presentation, we're going to go over some live charts. So you're going to throw me up chart symbols. I'm going to chart it, and I'm going to show you where I think it's going and why. Okay? Is that cool? Is everybody, if we can all play by those rules? Oh, all right. All right. My name is Hubert Sanders, and this is my no BS approach to trading and investing. So this is going to be different, but in a good way. We're going to have fun as we go through this stuff. Now, I've given you my call trading. Now, a personal belief that I have is that if you want to be good at something, you get around other people that are good at that, and you copy what they do. Okay. So for me, I hang around people that are way more successful and have way more money than I do. Some of that stuff rubs off, and I'm able to take some of that stuff. So the pictures up here are for a couple of reasons. Number one, to show you, like, if you hang around other successful people, and this is Paula Abdul. She's actually a little bit shorter than that. She's got 6-inch heels on, so she's actually about that tall. I'm 6 foot tall. This is Richard Branson. I help him with his charity foundation and stuff like that, his Virgin Unite and stuff. And then the other reason I do this is to go, look how many chins I got here. It's like 3 or 4 chins. 3 or 4 chins. And I'm starting to lose some more weight because I'm starting to exercise and eat right a little bit better. This is my office in the back cave in my house. I've got a little secret door that opens with an electronic button that then opens up into a little 1,500 square foot office. And we've got whiteboard paint on the walls and stuff like that, and that's just where I trade, so we call it the Bat Cave. These are 6 24-inch LCDs, but I'm surrounded by about 20 of them in the office. So yeah, I know it's juvenile and it's immature, but to tell you the truth, I like it, so I don't really care. I just think it's cool. So if you do that, if you get around other people that are doing about what you want to do or doing what you do, if you follow their advice and they tell you, like, look, this is how I did it, if you follow the same formula, you should get about the same results. Okay? Makes sense. So congratulations, you're at the right time. You're at the right place at the right time, and here's why. So tonight I'm going to show you Ichimoku cloud charts. And I know it sounds like I sneeze, like Ichimoku, right? Ichimoku cloud charts are a great strategy, technical analysis technique. Okay? What Ichimoku stands for is at a glance. At a glance. So you're going to know exactly what's going on with whatever you're trading. If it's a stock, an options, a futures, Forex, it really doesn't matter. What this is going to do, and the cool thing about this technical analysis is it does what no other technical analysis tool does in the world. It's going to give you the past, it's going to give you the present, and it's also going to give you the future. Okay? So you're going to be able to take a look at the past, the present, and the future with this technical analysis strategy. Now, it's going to identify trends and signals really, really well. Now, I got to do something a little bit different here. Number one, sit back and relax. I don't have an indicator to sell you, okay? This indicator, Ichimoku, or cloud charts, should be on your trading platform. If it's not, change platforms or ask them to add it. It's not that complicated. So it's on all the major platforms out there. So I'm not here to sell you an indicator. I'm here to show you how to use a built-in indicator that you already have. Signals really well, and it's designed to produce super, super clear signals. So if I can learn how to tweak the slides here. All right, so these are the results. So you want to write this down. Now, these are not my backtesting models. These are a third-party verified backtesting results. If you use this strategy that I'm going to teach you, and you use the filter in order to filter out the good trades, then what should happen based upon the last 5 years backtesting on the stocks in the S&P index, out of 500 stocks, if you take 430 stocks, then that's about 86% of the S&P 500. If you take every single signal, if you take all the longs and all the shorts, long, short, every single signal that this one strategy will give you, then you have the ability to get a 33% return, okay? Now, that's a pretty good return. if you only take the trending signals and you remove the counter trend signals, all right? If you remove the counter trend signals and you wait for a 3-day confirmation, then you're going to increase your return from 33% to 79% just by using one simple filter criteria. And I'm going to show you that. All right? This works basically across all of the stocks in the S&P 500, 86% of them. 33% of the time, if you want to go crazy and go long, short, long, short, long, short, long, short, I don't recommend that. If you want to go with the trend of the market and only go in the trending set. Okay? Now, the best time frames that you can use with the strategy is called a weekly, a daily, an hourly, and a 10-minute. Okay? Now, my favorite ones are a daily, an hourly, and a 10-minute, and I use that across almost everything that I trade. So what I do is I just call it a daily 60-10. Who in here, let's take a quick sample before I go to the next slide. Who in here already uses Ichimoku or cloud charts? Do you already use them? So there should be several people. So not as many as I would think. Okay. So all right. So there's a few. All right. Who in here does not use Ichimoku, cloud charting secrets? You don't know anything about them. You know candlesticks, but you really don't know what I'm talking about. You're like, what is this Ichimoku he's talking about? Okay. All right. Cool. All right. Now, this strategy has been profitable on 29 currencies over the past 10 years. 29 currencies over the past 10 years using this strategy. Daily, hourly, and then 10 minutes. Now, you can use one or the other. You can use either a daily and hourly if you're a little bit longer term trader, or you can use hourly and 10 minute. I combine the three. I use daily, 60, and a 10 minute. Okay? All right, so there's 5 levels of trading. So the first level is where you learn how to lose lots of money. The second level is where you learn how to lose little bits of money. So first you lose massive amounts of money, and you get really proficient at burning through cash. And it's a sucky place to be, and you want to try to get to level 2 as fast as you possibly can, where you learn how to lose little itty bits amounts of money because you went through so much pain, and it's so painful losing lots of amounts of money that you want to stop that. And then third, you learn how to tread water, where you make a little money, lose a little money, make a lot of money, lose a lot of money, and you just tread water. It's designed to help you go from stage 3 to stage 4. Okay? Spelling, yeah. Spelling is not my strong suit. If spelling freaks you out, I'm probably not your dude, right? I trade. That's about all I do. I trade and run businesses. I don't get any. I get no awards for. I'm actually dyslexic, so it's amazing that there's even letters on the slides. And then you start learning how to make a consistent cash flow, and consistent's going to depend. Like for me, I usually make most of my money 3 or 4 months out of the year, and then I spend the rest of the time trying not to lose much of it. Okay. And then making a killing is asterisk because I don't want to go to jail. I don't think I would do well in killing. It may be a couple $100 a day, a couple grand a day, 20 grand a day, 2,000, 200,000 a month. I don't know what a killing is. So, just real quick, what stage are you in right now? Are you in stage 1, 2, 3, 4, or 5? What stage are you in right now? Okay, lots of 3s. That's pretty normal. Lots of 3s, some 2s, a couple 4s in there, some 2s. All right. So one of the main things that you can do, and I've helped tens of thousands of traders, one of the main things that you can do in order to go from stage 3 to stage 4 is hold on to winners a little bit longer, okay? If you hold on to winners a little bit longer, then it'll increase your P&L curve. And it sounds really simple, but it's really hard to do, okay? Because you're like, oh, well, yeah, cut your losers loose quickly and hold on to the winners longer, obviously. But really, if you'll just hold on to your winners just a little bit longer, it'll add up in the long term. But how long to hold? So I'm going to show you a strategy that's going to make it super easy on you on how to decide that, okay? So it's going to take out a lot of the emotion and a lot of the inconsistency, and we're going to take you out of the equation. We're like, oh, I'm going to go long here, I'm going to go short here, I'm going to hold until this happens. All right. So there's three major styles that people kind of mess around with the market. So the first style is, number one, they'll take a big loss, and then they'll take another loss, and then they'll take another loss, and then as soon as they make some money, as soon as they make just a little bit of money, they're like, out, I'm out. And the reason they jump out so quickly is because they're like, oh my God, I lost so much money back here. I just know all of it's going to turn into a loss. And then they'll get another trade, and they'll be like, all right, I'm out. They'll take another profitable trade, and they're like, all right, I'm out. And then they take another huge loss. So it's little gains and big losses. So that's style A, okay? Style B is kind of how I always try to trade, is like this. And what I do is I start out, and I'm usually losers and then some. And then I go through a series of losers, okay? Series of losers, series of losers. And then big old trade again. That's the way I try to always trade. Now, I don't always do it that way. Exactly. And then the last but not least is where you lose a lot of money on the downside. You lose a lot of money, and then you take little losses too. And then you take big losses, and then you take little losses too. So you got to be careful on that. So what style are you right now? Most of you in this webinar said you're at level 3. So what style are you? Oh, lots of A's. All right, so if you're an A, we've got to fix that. If you're a B, you're on the right track. If you're on a C, well, you're just in pain right now, okay? So we're going to try to get the A's to switch over to B's, and the B's, we're going to try to get them to hold just a tad bit longer. Okay. All right, I always tell this story on every webinar. It's the pot roast analogy. So we're going to use Lisa, and we'll use Jeanette. So my wife's name is Lisa. And Lisa's making supper or dinner, whichever part of the country you are. And they're making a pot roast, and Jeanette's over. So Jeanette's over, and she's helping Lisa make supper. All right? And she goes, all right, we're going to use carrots, potatoes. We're going to do salt, some pepper, some garlic. And then what we do is we take this pot roast, we cut the ends of it off, and then we put the pot roast into the pan. You can see where the pot roast, the ends are off of it, right? And then Jeanette goes, I don't understand. Why would you cut a piece of meat and then put it in the pan? If you cut the meat, the juices and stuff are going to flow out. It's going to be dry, not moist. And Lisa goes, I don't know. That's how my mom taught me how to make it. So Lisa goes over to her mom's house, and she goes, hey, Mom, why do we cut the ends off of the pot roast? And Lisa's mom goes, well, you know what? I don't know. That's just how Grandma taught me how to make it. So Lisa and her mom go over to Grandma's house, and then Grandma goes, all right, here's what you do. Salt, pepper, garlic, oregano, potatoes, carrots, and then, you take this pot roast, you cut the ends of it off. You take the pot roast, you put it in the pan, and then you put the pan in the oven. They're like, whoa, right here, this step right here. Why do we do this? And she goes, oh, bless your heart. Bless your heart, honey. One pan, so the pot roast was usually too big to fit in the pan. Therefore, I would just cut the edges off, and it would fit in there. It's the only way it would work for us. So if you're doing something just because someone showed you how to do it, it may not be the actual best thing in the world for you. So can you relate? Have you ever done something just because, like, well, I don't know, that's how my mom or dad showed me, or that's how my broker showed me, or that's how my financial guy told me. So everybody does it, right? You're just like, well, that's just how we do things around here, right? That can just be the death of you, all right? So if you are using what everyone else is using, well, complete the sentence. If you're using what everyone else is using, well, you're probably going to get about the same results that everybody else is getting. Now, I don't know if you want to be like everyone else. For me personally, I don't want to be like everyone else. I want to be like me. I want to be like other successful people. I want to be like other successful traders. I want to be better than the normal. Does that make sense? All right? So, now, if you're using the same thing that everyone else is using, it's not your fault. You may not have even known about this. All right? So, anything and everything that I tell you today, all right, you can trust, right? Like I kind of trust a lot of people, and sometimes I'm loyal to a fault, but you can trust me, but make sure that you verify what I tell you. So what I'm going to do is I'm going to show you a technique. You go back and back test it. You can just do a country boys optimization where you just take a look at the signals and go, that makes sense. It looks like I would make money there. Or that redneck from Kentucky is full of crap, it looks like I would have lost money on every single one of these trades. So you can trust what I'm telling you, and there's nothing wrong with that, but just make sure you verify everything that I tell you. Okay? True or false, if you can trade any market. Do you believe that? True or false, if you can trade any market. I would lean more towards the true, maybe. I would say true, but it's a lot easier if you trade something that matches your trading style and your personality. And there's some actual techniques that you can go through. So if you're trading the E-minis and you're getting chopped up, trade gold or trade bonds. And here's why I say that. So if you're trading the E-minis and you're getting stopped out, they go like this. They go run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. If you're buying those on a breakout, that's just pain. That's all that is. Now, if you want to trade gold, it goes like this. It'll break away, consolidate, break away, consolidate, break away, consolidate, and then it'll pull back. Bonds go like this. Bonds go up, pull back, up, pull back, up, and then they retrace. So if you're a trend trader and you buy pullbacks or breakouts, gold and or the bonds will be better than the E-minis. Okay? So, makes sense? Trust but verify. It's going to be painful and very, very frustrating. It's going to be super painful. And there we go. Audio 1, 2. It looks like I lost connection. Audio good. Sorry, it looks like I'm nobody's having just a little bit. Hold on just a second here. We got a real bad rainstorm outside too, so that may be a bit of the cause. Okay. Audio 1, 2, 1, 2. Sound is back now. Better now. Okay. Maybe the storm outside, so we'll just chalk it up to that. All right. So what's wrong with trading better faster? I don't think there's anything. Where are you located? I'm in Versailles, Kentucky is where I'm at. Versailles, Kentucky. What's wrong with trading better faster? There's nothing really wrong with trading better faster. Okay. All right. Cool. It's my belief there's no real. It's my belief that there is no shortcut to long-term success, but you can learn some tricks and tips of doing the right thing at the wrong time can be very, very painful. So what we're going to do is we're going to learn how to do the right thing at the right time so that it's not as painful. All right, so once we do this, what's going to happen is you've got to have these 3 criteria, in my opinion, in order to be a really good, profitable trader. Number 1, you have to have really, really good money management skills. You can't go crazy and risk a lot of money thinking you're going to double, triple, or quadruple your account. You have to take small amounts of risk, controlled risk. You will have to have good entries, all right, and you will have to have good exits. Once you get all 3 of these together, your confidence and your profits will begin to soar, in my opinion. So you got to have good money management, good entries, and good exits. You got to have a good plan too. Okay. So let's get started. Ichimoku cloud charting, the number 1 technique used in Japan. Now here's the deal. It has been the number 1 best-selling book 7 years in a row in Japan. Okay. Now, here's the thing. Anybody in here speak Japanese? Anybody? I know I don't. I mean, there's a lot of Japanese folks around Georgetown, Kentucky area, but I haven't had a chance to have everybody translate the book for me. So what I did Is this on toss? Yes, it's on toss. Learning Japanese, one. That's funny. So what I did is I gathered up all the textbooks I could and all the research material, and I've condensed it down in a course, and I'm going to teach you a piece of that course tonight, okay? So you're going to know exactly what's happening in seconds as soon as you look at the chart. It's going to give you trend signals, and they're going to be super, super crisp and clear, and you're going to know exactly what's going on. Now, the hard thing about this methodology is first learning what everything is on the chart. So here's what it looks like. So I'm gonna fast forward to the first couple of slides here, and then we're going to come back to a couple of slides, and I'm going to show you. So this is what it looks like. Does it make sense? So it kind of looks weird, though. It's a little overwhelming at first, like, right? When you look at it, you're like, oh, God, that's confusing. I can't even see the price action. Anybody else have that type of reaction? The first time I saw it, I was like, God, it looks complicated, right? Oh, my, right? You're like, oh, man, that's ugly, right? Well, how could you make sense of that spaghetti soup? You're like, why all the pretty lines? Makes no sense. All right. So here's what we're going to do. We're going to break down every single component. All right? So let's back up. Every decent charting platform out there has it. So here's what you're going to learn. You're going to learn what is on the chart, and we're going to go through it piece by piece, okay? So the first thing you're going to learn is you're going to learn the turning line. And the turning line, the best way to think about that is the fast line, F-A-S-T. The standard line is the slow line, okay? So the turning line is a midpoint of the high and the low of the last 9 sessions, okay? The standard line is the midpoint of the high and the low of the last 26 sessions. And you're sitting there going, oh my God, it sounds like a word math problem. Cloud span A is the midpoint of the turning line and the standard line shifted 26 bars forward. Cloud span B is the midpoint of the high and the low of the last 52 sessions shifted forward. Anybody confused yet? And the lagging line is the price line close shifted 26 bars back. Is this the NASA formula? Yes. Headache, right? It sounds really, really complicated. The cool thing about this is I am dyslexic, so the way that I will teach it to you, by the time this webinar is over, you'll be like, oh, that makes total sense, all right? Because I'm really visual. So anytime I learn something, I break it down so it's super, super easy for me to understand, and it also gives me the ability to teach something that's very, very complicated and make it so that it's very, very easy to understand. So let's go through the turning line. So write down in the chat box, this is the fast line, okay? Just remember fast, okay? Fast, turning fast. The midpoint of the high and the low of the last 9 sessions. The midpoint of the midpoint of the high and the low for the last low of the last 9 bars. Then you're going to divide that by 2, and that number is going to be the midpoint. Does everybody understand how to calculate that? No, it's not a moving average. It's not a moving average. It's a midpoint of the high and the low of the last 9 sessions. So it's a midpoint average, not a moving average. It's a little bit different. All right, so here's our first slide. So here you can see the red line is the line that is the closest to the price action. Does everybody see that? So the turning line is the midpoint calculation. You take the high and the low of the last 9 days, and then you divide that down here where this red line on Apple, on this example, and over here to the right it says 442.88. Give an example to calculate. So we're going to go through an example to calculate. So the red line is 442.88. So here's how you calculate that, okay? So you can see, I'm going to start drawing on the chart now. You see this red line right here? And you see this number over here where it says 450.07. So what you do is this is day 9. This is day 9. This is day 8. This is day 7. Day 6. Day 5. 4, 3, 2, and 1. everybody following me so far? If I lose you on this part, we're taking we're taking 9 bars back is all we're doing. Okay? Now all we're going to do is we're going to take the low of those 9 bars, and then we're going to take the high of those 9 bars. Easy enough, right? I mean, if you can add 2 plus 2, you got this. Okay? So what you're doing is you're going to take the low and the high. So this is the low, this is the high. You're going to add them together. That's going to give you 900.14. You're going to divide it by 2, and that's going to give you your number. Now, the cool thing about it is it's the high and the low divided by 2. That's right. The software just goes ahead and calculates this up for you. So you don't really have to know what this is. The reason I like explaining it is because you will actually know what's going on. Because now you'll know what it's calculating. You're like, oh, I know what that is. So all you're doing is you're taking the high and the low, adding them together, dividing by 2, and then you also get that number. Is everybody with me? So I don't have a pointer. I'm drawing on the screen. So you should see a bunch of stuff on the screen. Everybody kosher? Can I move to the next slide? That's the first line. Now what's that line called again? What's the line called? It's called a turning line, right? The reason I don't use the Japanese names is because I can't pronounce them. Yeah, you can call it the turning line or the fast line. All right, you got it. That's perfect. All right, so let's move to the standard line, the medium. The medium, all right? The standard line is the midpoint of the high and of the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars. You're going to divide that by 2. That number is the midpoint. So let's take a look at this one. All right. So what was this red line here called? The one that's hugging price action. So every platform is going to have a little bit different colors. It won't matter because now you'll know that the line that's closest to the price action is always going to be the turning line or the fast line, right? You will know. So if your platform has it as gray or green or blue or whatever, it won't matter. The line that's closest to the price action is always going to be the turning line. Now, the line that is next closest is going to be called the standard line. And the way we're going to remember that is it's the medium line. So this is the standard line right here. This green one right there. So now you know what that is. All right. Let's go to the next slide. Okay. Here's how you calculate this up. So what you're going to do is this is now, N-O-W, right? You're going to count back 26 bars. Does everybody understand? So 26 bars. This is day 1. This is now. So you go 26, and you go 26, 25, 24, 20, 18, 19, 17, all the way back to 1. Everybody got me? Then you're going to take the low, and you're going to take the high. 465.75 plus 385 is going to equal 850.85. It's going to divide it by 2. Your number is going to be 425.42 right here. Okay? You don't have to know that. All you have to know is this green line. That's how it's calculated. And when it shows over here on the right, it's going to tell you, oh, okay, that's the green line. That's the standard line. I know what I'm doing. Everybody kosher on this point? Can I move on to the next one? All right, cool. Anybody lost? Hopefully I'm doing a decent job of not losing anyone. All right, no one's lost. All right, we'll go on to the next slide. Now it's going to get a little bit more complicated, but not bad. Cloud span midpoint of the turning line and the standard line shifted 26 bars forward. So you know what the turning line is, and now you know what the standard line is. You're going to shift that bar 26 bars forward. So here's what it looks like. What's the red line called? What's the red line called? You can either call it the turning line or the fast line. I don't care. Okay? What's the green line called? Called the standard line or the medium, right? All we're going to do is we're going to take from take the distance between those two, and we're going to shift it forward 26 bars. Let me do this right here. So you're going to take, come on, pen, work right. So you're going to take from this point to that point. Here's your midpoint, and all you're going to do is you're going to shift that 26 bars to the right. And that's going to give you cloud span A. That's going to give you the low side of the cloud. So I'm going to erase the ink and let you stare at that really quick. Okay, please, PowerPoint, play nice. There you go. Does that make sense? You take the distance, the midpoint between the green and the red. Sounds like the way theory. That's fine. All right, now let's go to cloud span B. Cloud span B is the midpoint of the high and the low of the last 52 sessions shifted forward. Okay, what's happening here? Do. My PC's not wanting to play well. I think I've still got audio, but my PowerPoint hates me now. All right, give me just a second here. That's kind of weird. My PowerPoint just said, I am not playing. Try again. Let me do something here. That's just weird. Never had that happen before. I'm going to stop. Audio 1, 2. I'm still here. I'm just having a little bit of problems here. Let me just try to reinitiate the screen sharing here real quick. Maybe that'll fix me up. Let's go to marker 6. There we go. It must be quantum. I know, right? It must be the storm. Well, I don't know, folks. It's a new one. Yes, it is on toss. Ichimoku is definitely on toss. That's a new one. Give me just a second. I don't even know what's wrong. Let me try to refresh. Control delete. Just give me just a second here. Evidently either PowerPoint or Omnovia. One of the two are mad. It seems to be PowerPoint. Interesting. All right, give me some PowerPoint and I'll restart it real quick. I've never had that happen before. Well, what we may do is I may just go straight up to just charts and really teach you how it works. Give me just a second. I'm still here and I'm committed to you. I will make this work. I just got to teach you the basics, and then we'll move on to we'll just move on to the charts. Okay. Oh, you gotta log in, log back out. Are you serious? Let's try it one more time without it and see what happens. What do you guys see on your screen? Cloud span B? Okay. Hit stop. Start desktop sharing. We were going over cloud span B, correct? Correct? Okay. Got the standard line. Got the cloud span A. Of the last 52 bars and then shifting them forward 26 bars. Does everybody see this slide? I just want to make sure I'm taking care of everybody. So this is bar 26 right here. Now, this is actually bar 26. And this back here would be bar 1. Okay? So what you do is you take the midpoint between those two cats, and then you shift it 26 bars. Okay, so this is bar 52, and it's all the way 52 to 1. And then what it does is it goes zip, midpoint between those two, and that's cloud span B. Okay, so does anybody remember how cloud span A was calculated? It's right here. You said this midpoint shifted right here. So that's how you get the bottom of this cloud, and that's how you get the top of that cloud. So you take 52, this would be 52, and then that would be 1, and you take the midpoint and shift it forward 26 bars. Now, let's take a look at the shifted 26 bars, and it's super easy to take a look at. So do you see this blue line here? So what this is the lagging line. Okay. What's the green line called? What's the green line called? Stand. All right. Top of the cloud, cloud span A, and then you got cloud span B, right? So here's why this is so powerful. You get the past. Now with the blue line, what's the blue line called? What's the blue line called? Lagging line. Here's why this is so powerful. This is where the present price action is at, and here's where the future price action is going to be, right here. You see this little cloud forming? It's going to say, hey, if this daggone thing sells off, that's where support's going to be. So the concept of when the price action and the lagging line touch the cloud, not as great, but tradable. When the cloud span crosses, when it changes colors, and when the turning line crosses the standard line, kind of like one of the most powerful is if the price action of whatever you're trading, if it's above the cloud, it's bullish. Okay? If whatever you're trading is below the cloud, it's bearish. Does that make sense? There's no in between. There's no in between. If it's above the cloud, it's bullish. If it's below the cloud, it's just bearish. All right. Lagging line crosses the cloud. When the lagging line crosses the cloud, here's what you want to look for. Number one, the price action had better be across the cloud for at least 3 bars when it does that. Okay? When the price action crosses below the cloud, then you want to get short Apple and stay short Apple until it either touches the top of the cloud. The cloud is support or resistance, depending on where the price action is. And you can kind of see that from the chart, right? So Apple was in a massive uptrend. You could see it would sell off into the cloud and bounce. Sell off into the cloud, bounce. Sell off into the cloud and bounce. And then this would, sell off into the cloud and it bounced, and then it was like, oh, I can't bounce. I'm going below it. And then once it went below it, and the blue lagging line crossed below too, said, uh-oh, this is a new down trend. you had better short this thing and ride it for a little bit. Does it make sense? So it looked confusing, so I'm going to remove all my little chicken scratch here and let you just stare at that for a minute. Weird when we threw that chart up at first, right? Because you're like, man, it's just confusing. It works on everything. It works really great on options. Really great on options. Works on just about everything out there. So what you're going to do is you're going to stay on the right side of the cloud, all right? And if you're above the cloud, you're going to buy support as a little mini trampoline. Now, if you just use your common sense, you can see some of these other trades. I don't have enough time to go through all of them. But what you can do is if you want a real fast trade, you see where the red line crosses the green line? Now, since we're in a downtrend here, I don't want to go long. What I want to do is the next time that the red line goes back below the green line, that's a good short, right? It's kind of like a moving average crossover. So there's a new short. And you can do that several times. It's a fast trade. It's not the most consistent trade in the world. The best trade you can do is when the price action and the lagging line goes above or below the cloud and hangs out there. Because you can see in Apple, it got smoked, right? And then you're probably going to say, well, hold on. The price action down here was 3 days below. Well, you had 2 days below, and then the price action closed into the cloud. And plus, when this happened, you know aggressive, it happens quicker, but you're almost always better waiting for the lagging line to cross over with you. And then you also have some counter trend trades that you can do when the lagging line touches the cloud or when the price touches the cloud. So it'll happen when the trend begins to change, but if you know you're in a massive downtrend like an Apple here, then what you want to do is when the price action touches the low part of the cloud, you're going to short that. When the lagging line touches the bottom of the cloud, you're going to short that, okay? And look for it to roll back over. Now, if it gets on the other side, then you have to say, oh, I can't short it anymore. It's crossed this little creek, and now it's going to go from bearish to bullish. Now, notice, turn blue. That's telling you the future. It's saying, hey, heads up. I'm going to cross this thing, and this is going to be my support area. Time frames do matter. Do a daily, a 60-minute, and a 10-minute. Those are the best ones. So, now, let's say you're not a trend trader. Let's say you're a counter trend trader, and you're like, you know what, I don't like this trend trading stuff, Hubert. It's too slow, and I just hate money. Can you make me a counter trend trader? Yeah, you can do that. What you can do is this right here. If you know, just use your common sense. If you know this is support here, right? And this is support here. As soon as the red line and the green line cross, you could short that, and where would your target be? Well, your target would be support. Now, once you cross this and you go below it, then what you can do, if you want a little bit faster trade, moving line crossover, moving line crossover. The lagging line is just the price action shifted back 26 bars is all it is. That's all the lagging line is. All right. So bullish signals. Bullish signals. Price action above the cloud. So if your price action, whatever you're trading, if it's above this cloud, you're good to go. Price action in the cloud is bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of the trend change. The price crossing the cloud is earlier but less reliable. It's a good warning signal of change. So that's some of those. And then you can reverse those same things for the bearish signals. The price below the cloud is bearish. If the price action goes into the cloud from the low side, that means it's bearish if it's from the bearish side. The lagging line crossing the cloud is the main signal of the trend change. So let's go through, let's hit some live charts. You want to? So remember, here's the results. And what I want to do is hit this is going to be important. So I've already covered how successful it is. So here's probably the most important slide in the presentation. And I'm going to show you a couple trades that you can actually take advantage of right now. So what I like to do on a 60-minute time frame if I see the lagging line and or price, if I see price action and the lagging line cross the cloud, then I know I've got 3 to 5 days of bounce coming. 3 to 5 days. Does that make sense? So a hourly signal is good for 3 days. A 5 to 10 minute signal is good for 2 to 4 hours, and a minute signal or tick charts is good for about 30 minutes. Most important slide in the presentation because it's going to do time frame. Now, if you're looking at a daily signal, that's going to be good for about 30 days. If you're looking at a weekly signal, that's good for about 6 months. So for our example, my favorite is going to be daily, hourly, and then a 10 minute. So we're going to spend a lot of time on that one. Okay. So let's go to a couple of examples here. Discard. All right. So here's how I've got my chart set up. You should be able to see my trade station. So I want to show you. Let's start with a daily first. Okay. So this is trade station. I'm gonna format this really quick. All right. Let's go AAPL because I want to show you Apple really quickly. All right, let me remove this parabolic SAR. That's how I use stops. Format analysis technique, parabolic SAR, status. Okay. All right, so this looks a little bit different than the charts I was showing you earlier, but it's the same thing. And the reason I showed it to you is because different charting packages have different things. All right, so we're going to go back in time here a little bit on Apple. So what's the first thing that you see here in Apple? Do you see here in Apple that you're in a massive uptrend? Do you see where your price action is above the cloud? This is a massive uptrend, right? Massive uptrend. The price action is above the cloud. The lagging line is also above the cloud. And you notice how the fast line is acting like a little mini trampoline, like every time it touches it, bing, bing, bing. You see that? Now here's the thing. You have to use candlesticks with this. Don't use bar charts or anything else. It is a Japanese technical analysis strategy. Therefore, it does really well with the candlestick combinations that Stevens taught you, okay? So when you come down here and you can see this situation where it hits the cloud and it bounces back up, right? Notice here where it went below the cloud, but it only had 1, 2, and on the third day it went back up into the cloud. Well, the lagging line never crossed, so you were still in bullish territory. Notice what happens here. Notice this. Bounce. And notice what happens here. I'll be daggone, bounce again. That's not going to last forever, right? Nothing always goes up and nothing ever goes down at the same time, right? Nothing goes straight up and straight down. So now let's fast forward here and let's take a look at Apple. And let's say, okay, now we've got a little bit of the price action below the cloud. And about this time, actually right in here, see where my pointer is? Right in here. I'm going to mark it with a little square. About right in here, this is when this lagging line crossed below. Now have you had more than 3 days below the blue cloud? So the blue cloud was support for a very long time. So it's telling you this is the present, this is the past, the blue lagging line's the past, the cloud's always the future. So you've had more than 3 days, and then when the lagging line goes below the cloud, what does it mean? It means the trend has changed and you have to go in the opposite direction. You now have to short Apple and stay short Apple until you cross the other side of the cloud. Okay? So notice what happens. Now, you had one little head fake in this whole scheme of things. I'm going to blow this up really quickly. So you have got short here, stayed short until you crossed the price action on the other side. So basically, you would have been short around 600, and then you'd have covered around 450. Not a bad trade, right, in the grand scheme of things. Now, let's take a look here. Where's Apple at now? Notice once it crossed above, in this section right here, it crossed above, but the lagging line was not above. So it was, you could go ahead and get out, but it wasn't a total trend change. Now, notice here where the price action was above the cloud and the lagging line went along for the ride. Okay? Now, we've got all of the support for Apple is below it because the price action is above the cloud, and now every time it touches the cloud, boing, touches the cloud, boing. See how powerful it is? You use this with candlesticks, and you will be surprised of how much of a better trader that you will become. Okay, so let me go through some time frames here. So on a few days ago, I was telling people like, hey, crude oil is about to bounce. Okay, and here's why. So, number one, what is the state of crude oil right now? You should be able to go at an instant. You should be able to tell me exactly what crude oil is doing. Is it bullish or bearish on the daily chart? Tell me right now. Bullish or bearish? Bearish. So we want to make sure we always short that thing, okay? Now, a quicker way to trade it. So we're going to stay short until it gets on the other side of the cloud, right? Well, here's what you can do. What I do is I use a 60-minute. When it crosses on a 60-minute, then it's probably going to bounce because nothing goes straight up and nothing goes straight down. So we were fortunate enough to ride crude all the way down here until the 60-minute chart closed above the cloud and the lagging line went along for the ride. How many days is it going to bounce? How many days is it going to bounce on a 60-minute signal? You may remember from the most important slide. 3 to 5 days. So down here when this happened, look, now we've had, 1, 2, 3, 4 days. Now, where's it going to go to when it bounces? Common sense tells you it's going to go to the yellow, the purple, and where else? If it clears the yellow and the purple, where's the next place it's going to go to? Where's the resistance at? Where is it telling you the future of the price action? That's right, bottom of the cloud. So see, now you never have to actually look too hard at things, and you can be like, oh, right there's where crude's going. It's obvious. I mean, if you 1 and 1 is 2, that's where crude's going to go. It's not going to go straight down. It's not going to go straight up. So you've got the past is the lagging line, the present is the price action, and these fast and moving midpoint averages, and the future is the cloud. Makes sense? I hope I didn't confuse you. So now what we're going to do is we can go through, and I'll spend the rest of the time on daily charts because daily charts is just easier if we use a lot of different charts. And what we can do here is if you want to throw me some charts. So how do you guys like the strategy? Why did the lagging line stop? The lagging line stopped on crude because all that the lagging line is a 26 bar shift back is all it is. Okay. Can you set it up with TC2000? I don't know if TC2000 has it, but can you see how powerful it is? Okay. So does anybody in here have, where do I find Ichimoku on TradeStation? It's under the settings, under indicator. It's right here. Go right click and then go insert analysis technique. And then it's under my name right here, under Ichimoku Cloud right there. You got to set up TradeStation the correct way in order to see it, though. Okay. TC does have it. There you go. Like I said, I'm not here to sell you an indicator. But what I do want to do is I want to give you the opportunity to learn more about it. Okay? So let me give you the special offer, and then I'll take questions, and then we'll spend the rest of the time on live charts. Okay? So you got to have good setups. A good setup executed will beat the pants off of a perfect setup any day of the week. Good is good enough. Do not try to filter out all the losers and the stop-outs. They're going to happen. You just got to get used to that type of stuff. That is a fool's game and for suckers only if you think you're never going to get stopped out. Okay? You need to learn how to enjoy the process and work in some of the wins and some of the losses. Okay? Now, let's take a look at the offer, if I can get the slide. So here's what I've got for you. If you go to hubertcenters.com/cloudy, I've got an entire course on what I just taught you. It's called Cloud Charting Secrets 101. And I covered about a quarter of the material there with you tonight. And what I'm going to do is I'm going to do another live class next week. So what I'm going to do is I'm going to give you the opportunity to buy the pre-recorded class. That's usually $197. And then I'm also going to do another class live with you next week over the entire course material again. And then we're going to have live Q&A on that one. Okay? So you'll have the weekend to go through it. And then you can also attend the live class next week. And then we'll have a live Q&A session. So that way you'll be solid and you'll know how to be a cloud charting secret master in the span of 3 or 4 days. Okay? So your special offer for tonight only is $97 or for the first 100 people. Okay? First 100 orders. You can also call the office. We've got people standing by. Jared, and Kelly, and Susanna are standing right behind me. The office line number is area code 859-963-3445. Area code 859-963-3445. So that's the number, okay? All right. So any questions? How do you use a 10-minute chart? Do you simply apply that to options? You can use the hourly. You can use the I use the daily, the hourly, and the 60-minute chart is what I do. Is this the class taught by Andrew Green, or has he had his last? No, me and Andrew both have a class on Ichimoku. Yeah, we're both huge fans of it. Yeah. Can you put up a bullish signal list for a second? What time of day is the live class next week? Let me see. I've got to go to the order page in order to find out. Hold on just a second. I hear you guys calling in the background. I really appreciate it. Thank you. If you go here, I think it listed on the order form. It'll also be recorded too. So when you go to the order form, it says a live review on December the 11th from 10 a.m. to 12 p.m. Works great on. What do you mean? Does it work on FX? It works on over the past 10 years. It works on 29 different forex pairs, like crazy good. Okay, so the live review will be December the 11th. At 10 a.m. to 12 p.m., and there you go. There you'll have it. Okay? Does it work on stocks? No. Does it work on all stocks? No. It does not work on all stocks. It works on a lot of stuff, but it does not work on everything. I think it worked on like 86% of the stocks in the S&P 500. I trade mainly FX and love it. So now this is kind of dangerous, right? I know there's several people in here that already have this class, so this could go horribly bad for me, or it's going to go crazy good for me. If you have the class, please give me your feedback right now. Did you like the class? Did you get a lot of value out of it? Do you think it was worth your investment? So I know there's people in here that's already taken it. I can't filter out comments. So if you say it's good, it's good. If you say it sucked, it sucked. Can intensity of the colors be manipulated with TradeStation to ensure that you can change the colors? Yes, you can. You can definitely change the colors of Ichimoku. Like the class, excellent class, great class. Thank you, appreciate it. Love the class, good class. Is the price of the offer already covered if you're already is the price of this offer already covered if you're already a member of your inner circle? So it's the same price, but if you're a member, call and see what they'll do for you. Works on ETFs. Great. Works great on ETFs. Loves the class. Great class. Thank you very much. Under TradeStation, all you have to do is format the colors of the indicator, and you can change it to chartreuse green or black or gray or whatever you want. Works great on options. So this is the #1 best-selling Ichimoku cloud charting secrets available today. So if you're interested in Ichimoku, if you're a huge candlesticks fan, you want to pick it up. All right, now. Let me go through, let's go to live charts, okay? Let's go to live charts. So if you go to hubertcenters.com/cloudy, I'm going to go through live charts. Oh, I want to tell you, if you do buy the course, it comes with my personal promise. My website has my own name on it, so it's my word. If at any time you're not satisfied with the course, I'll give you 100% of your money back. And I don't mean for like 30 days. I mean for like 365 days. If you take the class, and you just don't like the way that I talk, I'll give your cash back. That's how confident I am that you'll like the class and you'll get a lot of value for your money, okay? So it's a 365-day guarantee on the course, okay? All right, available on Thinkorswim. Yes, Thinkorswim does have the indicator. It is available. Here's some testimonials of some people that took the class. I had a great day. I made net $1,980 shorting ZB and GC. I was up $350 on 3 contracts, trading the YM on the FOMC. Technical analysis and Ichimoku course and favorite trade. Keep up the great work. Again, many thanks for your time and effort. So those are just a couple of testimonials for you. There is the link again. Let's go over here and take a look at some charts, okay? I don't want to sell you too hard. All right, so you throw out some symbols. I'll tell you where I think it's going. Just be gentle with me. There's still 453 people in here, right? AMD. AMD is a mess. Leave it alone. See how it's trying to get above the cloud, but the lagging line's not above the cloud? It's sideways, so don't touch it. So what I'm going to do, here's what I'm going to do, because I can't see everybody's questions. Well, maybe I can move it a little bit. Hold on. They go by so fast that I've only got about 2 inches of screen. No. Okay. So I'm going to oh, that's a lot of stuff. FCX. If I miss it, I apologize. There's just a lot of you here. Oh, FCX. It's on support. You got to buy it here. All right. It's a long, buy it on support. Your stop is going to be the low side of the cloud here at $34. Start with your choices. Netflix, NFLX. Let's do this. Let me go through the market really quickly, and I'll show you what's going on in the market, and then we'll do stock picks. So let's go add ES. So add ES, you always start with the broad market. So is the ES in a bearish or bullish mode right now? Bearish or bullish mode? It's obviously in up mode. It's bouncing every time it's touching that cloud. Now, it broke below the yellow, so where's it probably going to go? Where's it going to go? Maybe the purple, right? If it breaks below the purple, where's the next place it's going to go? Well, we've got good support here. Here's a little tip that you'll learn in the course. The thicker the cloud, the better the support. The thinner the cloud, the weaker the support. So we're due for a pullback. We'll probably pull back some, right? I don't think we're going to pull all the way back to the cloud. We'll probably pull to the purple line and bounce, and we're actually bouncing right now up $2.22. If you click on the slide of the chat window, one click. Okay, cool. Gotcha. Let's take a look at the NASDAQ at NQ. NQ, where's the NQ going? Up or down? Past, present, future. Where's it going? Up. It doesn't even look weak, does it? It's not even pulling back to the nice little yellow line. Easy, right? Now, just for my personal edification here, when we started it, it was really confusion with all those lines on there, right? It's actually pretty easy now once you look at it and you're like, oh, this makes total sense to me. The Ichimoku means at a glance, I now know what that thing is doing. It's pretty cool, isn't it? It's just crazy. Like you take a bowl of spaghetti soup and you're like, no, right there, it starts there and ends here. It's just crazy, sexy, cool. All right, so let's go at TF. At TF, the Russell. The Russell is in a massive uptrend. Look how many times it's bounced off this cloud. But it's in a little bit of a pullback, right? A little bit of a pullback. It's closed below the yellow, bounced off the purple. You know, it's probably going to bounce just because it's in between, but looks good. Let's take a look at which one I missed. NASDAQ. Did I do NASDAQ, Russell? Oh, YM, the one I trade the most. YM. At YM. Oh, come on, YM. At YM. All right. Where's the YM going? So I'll show you. This is one of the personal trades that I've done in my own personal account. First off, tell me, is this thing right here in an up or a downtrend? Is it been an up or a downtrend? Pretty easy, right? Up. So every time it touches that cloud, what am I going to do? That's right, I'm going to buy it. So even when it went below this cloud here, the lagging line was not below the cloud. And all I did is I bought it down here, even when it was below the cloud, because the lagging line was still up here. It continues to go up, and then as soon as it closes below the yellow or the purple, I can go ahead and take some profits. So good little trade, right? Simple, easy. All right, let's take a look at gold, at GC, because I trade a lot of gold. What kind of trend is gold in right now, up or down? No matter what you think about gold, what is cloud charting telling you? It's telling you it's down. It's below the cloud, and the lagging line's below the cloud. Gold should go lower. But if gold doesn't go lower, let's say it doesn't. Let's say gold's not going to go lower. If that's not going to happen, when it bounces, where's it going to bounce to? Yellow line, purple line, bottom of the cloud, which would be really great shorting opportunities for you. Let's take a look at the 30-year bond. Okay, 30-year bond. Now, this is interesting. What is the bond market in? Used to be in a massive uptrend, massive downtrend, crossed over, and now what's it doing right now? Is it below the cloud more than 3 days? It is below the cloud more than 3 days. See the lagging line? Lagging line, uh-oh. What do we got now? A new what? New downtrend. You need to short bonds. I'm already short bonds. If you're not short bonds, get short some bonds. You can do it in the ETF. You could go, okay, TFT. TFT. Let's go TLT. TLT. TLT is the same thing, right? TLT, it's below the cloud. Lagging line's below. Boom, it's going to go below. Target's going to be 100. TLT. TBT. It's the reverse, right? It's above the cloud, and the lagging line's about above the cloud. Probably going to go to 85. All right, let's go. That's the main futures markets. So now, throw me your symbols out. How do you do targets? Targets, I teach the targets in the course, and I teach the trailing stops in the courses too. It's not complicated. It's pretty simple. Like if you like how I taught it here, so let's go DDD. So here's the link to the course. I hear them taking orders in the background. There's only 100 available. So DDD looks good. It's in a massive uptrend. The yellow and the purple line are holding it. You can see that they acted like mini trampoline, 72.05. You could get long right now and use a stop at 72.05. BAC. I'm sorry if I don't get to you. I'm not being rude. It's just they come so fast it's hard to see all of them. Bank of America, solid uptrend. It's closed below the yellow line. Next target's going to be 14.89. If you're a counter trend trader, you would short it with a target of 14.89. If you're a trend trader, you actually need to wait for it to get to 14.89 and then buy it there. Tesla, TSLA. Okay, Tesla. Tesla's a massive short, and I have been shorted. I covered some of it down here, and I got stopped out on my second half up here. Okay, so it was a good short below this, and it's tagging this again. It's probably going to roll back over. So if you would short it, you would short it at 148 again. Amazon, AMZN. Full disclosure, I'm long Amazon from 75, so I'm a little biased, but Amazon looks awesome. It's in a bullish uptrend. The yellow's holding it. The purple would be your stop, and then target would be about 420. USO, which is going to be the same thing as oil, which is crude oil earlier. So USO, it's in a massive downtrend. Where's the resistance at? Right here. Same thing as crude oil, right? At CL. Same thing, right there. Crude. So crude's in a massive downtrend. It's going to bounce for 3 to 5 days, which it's already done that. And the cloud to the the bottom side is going to be your resistance. MCK. MCK, nice, strong. That's a stud of a little stock there. So good. It's staying above the cloud. It has closed below the yellow and the purple. So wait for a little bit of a pullback. If you can get a pullback to 150, get all over it. VALE. Okay. VALE. Ooh, it's looking like it's going to be a decent short. It's got 3 days below the cloud, but the lagging line, be careful. You gotta wait for that lagging line to get below that. Once it does that, you can short that thing. LNG. If I'm not seeing your stock symbol, I'm not being rude. They just go by so fast. So what I'm doing is I'm focused on the ones that are down at the low side. So if you just keep putting it in, I'll get to you, okay? LNG is a good long. Looks good. Breakaway to the high side. Your stop could be 41.80. NUAN. Massive. That's a dog of a stock right there. What is that, Nuance? I love their Dragon Naturally Speaking software, but the stock is in trouble. It's below the cloud. It's going to go lower. It's going to bounce to 14.74 and then sell off like crazy. Citibank. It says it's in an uptrend, but here you have to use a little common sense. That's just a mess right there. So you got to be careful. Does that make sense? Hopefully you understand what I'm talking about. IEP, massive long, huge uptrend. Buy it on a pullback. If it can get to 128, buy it there. If it can get to 123, buy it there too. SUNE. I thought I already did SUNE. Yeah, SUNE looks good. You could trail it here. You could buy it at 12.93, and your stop will be 11.53. IEP. Woohoo! All right, gotcha. MU looks great. I was just looking at that the other day. MU looks really good. Buy it. Your stop will be 20.88. Open target to the high side. Netflix. NFLX. Netflix. At a glance. So now, how cool is this? I don't even have to tell you. Is that good or bad? For real. Now you're your own personal stock analysis guy, right? It's pretty cool, right? Because now you actually know within a couple seconds, just glancing at a chart, like, oh my God, I don't know what to do with this. And you're like, oh no, I do. Netflix is in an uptrend. I need to be a buyer of it. As long as it holds this cloud, I'll be good. If it breaks the low side of this cloud, I'll just cut this sucker loose, right? MTW. It's on most of the good platforms, okay? It is that easy. It is that easy. It's not on every platform, but it is on almost every single platform out there. Ichimoku. All right. And if you guys need help setting it up, our offices are open 8:30 to 5:30. We'll help you out even in the live class. So as soon as you order on this link right here, you're going to get a link to the pre-recorded class that I just did this past year. Then I'm going to teach the class again next week live, and then we're going to do another live Q&A, and I'm going to walk through all the possible trade setups that you can do. In the course, you learn how to do entries, exits, and how to trail stops. Entries, exits, and how to trail stops. How do we know the few stocks in the S&P that it doesn't work well? You can just look, really, SM. You can just look. ULTA. Oh, all right. So this is a toughie. All right. It is in an uptrend, but what you have to do is you have to buy it here at the cloud, but your stop loss will be the bottom of the cloud. If it breaks the bottom of that cloud, you're just going to. So here's what I would do on this trade. I would wait to see if it's going to bounce out of here, or I would wait till it gets to the bottom of the cloud and pick up a small position there, because that's a nasty little bar there. So far, it's worked really good, right? It's held. But that nasty little candlestick there is scaring me off. So what I would do is I would just wait a little bit, either wait for a little bit of a bounce or wait for it to sell off to the bottom of the cloud and pick it up there. That's the only one that's kind of been weird to me. TBI. TBI is a little bit of a mess. Be careful. I don't really advise anyone trade anything below $5, so just be careful. You get a lot of people that manipulate penny stocks, so be careful. SFUN. That looks good. It's a valid uptrend. Looks like it's going higher. Trail your stop at 70.28. Looks really good to the high side. Looks good. Probably going to go through 80. Caterpillar, CAT. Caterpillar, little bit of a nightmare to trade, right? Because look here. If you're just sitting there going, God, it's just a mess. But if you take the mess out of it and just know, like, hey, heads up, it's not the greatest trading instrument in the world. It is above the cloud. But see the lagging line here? The price action's above the cloud, but is the lagging line above the cloud? It's not. Therefore, you can't go long. You just got to leave it alone. Sorry. GREN. I wish it was a better trader. Just right now, Caterpillar. I must have put that one in wrong. REGN. REGN looks good. It's holding up well. The cloud is holding into that support. And the lagging line here is about to get into the cloud. If you can get a little bounce out of there, it'd be a good little long. ADS. Ooh, that looks great. That's a pretty chart, right? Look at that chart, guys. That's beautiful. Solid uptrend, touches the cloud, bounces like crazy. You know, you got a little bit of a cross here. If you're a counter trend trader, you would short this on the anticipation of it going to the cloud. But that thing right there is just a stud. I would buy pullbacks and use the cloud as support. KMP. That's awesome stock right there. This is a new short. Now, here's the deal. On this trade here, KMP, you need at least 3 days below this cloud. And right now you have 2, so just wait for the 3rd day. The lagging line's already confirming it's along for the ride. Just wait for it to close 1 more day below the cloud. YHOO. Yahoo looks phenomenal. Get long here. Use a stop loss of 35.69. VXX. Massive downtrend. Wouldn't touch it with a 10-foot pole. I would short the heck out of it, though. It looks like a great short. It just continues just to grind lower. Look at that thing. That's just nasty. SBUX. Starbucks looks really good. You do have a cross. You've got a sell signal, but your support's the cloud. If you're a counter trend trader, you would short it here, but you don't have a huge target, so it's too late to short. So what you got to do is let it pull back to the cloud and buy it. ATO. All right. ATO looks good. It's a little bit of a mess here, but overall looks good. It's going to go to the cloud and bounce out of there, and I would use the top of the cloud as the entry and the bottom of the cloud as the stop. Goldman Sachs. Will the live session be recorded and made available? Yes, you will get the recorded session, and you will also get the live session too. I'll record that for you too. Where am I at? Goldman Sachs. Good long. Market's rolling over a little bit, so Goldman will probably go down here to 160. I would purchase it at 160 and use a stop of about 158-ish. Facebook. So Facebook's interesting. You tell me, what should you be doing with Facebook right there? So let's take a little test here. Facebook, a good long. You got to buy it, right? You got to buy that thing on support. So it's in a solid uptrend. It's sold off into the cloud. It never closed below the cloud, really, and it's starting to bounce pretty good. So looks like a decent long to me. It would be a buy with a stop. You could place a stop right here at the dead lows of that most recent move, 43.68, and see if it's going to bounce through 55. On the Ultra after hours, traded down 96 from the 166 close. ULT. Oh, Ulta? Yeah. So it got smoked. Yeah, that's bad. Yep. LVS looks great. I looked at it last night. Yep. LVS. So what does LVS say? Does it say get long, get short, or stay away? What's it say? It says get long and stay long. That's what it says. All right, so Twitter won't work. Where would you have bought Twitter? You could buy Twitter now. Or not Twitter. You would buy Facebook now, Gordon, and use a stop at the low of that most recent low. Okay? So LVS is a long. So TWTR. Look, it's broke. Why is it broken? What's wrong? Use your noggin. Why is it not working on Twitter? It doesn't have enough history. Not enough data, not enough history. So you can't really, it won't work until you get all this stuff into it, right? Yep. Hasn't traded long enough. So there you go. AGN. AGN is a what? All right, let's do a little class here. AGN's a long. It's above the cloud, lagging line above the cloud. You could buy it here. Stop will be 93.85. BIDU. All right, BIDU. BIDU is a good long. Stop of 162, target 180. Do you see a target for LVS? LVS. Yeah, hold on. I'll give you a target on LVS. Let me give you a target on LVS. 1, 2, 3. Target on LVS will be 78.37. 78.37. Yahoo already covered up. Looks great long. MU already covered up. Looks great. SPWR. That's a long, a stop at the below the cloud, yeah. Stop below the cloud, 28. Go ahead and get long, and target's going to be 35 Apple, AAPL. AAPL looks wonderful. Apple will probably, hold on. Apple's target will be 580, 585.49. It'll probably go to 600, but it looks like 589. 585 right now would be the target on Amazon. Or Apple. Boeing, BA. All right, cool. Boeing. Somebody answer the question here instead of me doing it. Boeing is a long or a short? If you're a trend trader, it's a long. If you're a counter trend trader, you could short it because you've got this cross. It'll probably go to the top of the cloud. Okay? But if you're a trend trader and your strategy is to buy pullback, just let it sell off down here to the cloud, pick it up at a discount, and flip it out when it goes back to 140. All right. Here is the link. Once again, I hear the guys on the phone back behind me. I know they're going to sell the 100 units tonight. Make sure you get your spot because after 100 units are gone, once they're gone, they're gone. Okay? Bank of America. I thought I already did Bank of America. Bank of America looks good. It's above the cloud. It looks like it's going to roll over a little bit, right? So if you're going to short it, target would be 14.89. I would pick it up at 14.89. I would not short it. I'd wait for it to pull back there. BITA. Looks good. I'd want it to close back above 32.64 to get long. Stop would be 28. Target would be 35. HD, Home Depot. Home Depot is a long, but it's a little bit choppy here. See that? That's its chop zone. But it is a long, but it's just not a great long. BID you already did. Dear Lord, that's a lot of stock symbols. JP Morgan. And I'm really running out of time. So let's do, how about we do this? How did you come up with the target on LVS? Fibonacci's. I would love to stay here and answer all these questions. I think Steven will kill me, though. PFE. PFE is a good long. Looks good, but you need to wait till it gets down to 30 to buy it because it's below the fast and the midpoint averages. IBM is a short. It's below the cloud. The lagging line is below the cloud. It's going to go to 170. Okay? Let's see here. Okay, all right, so here's what we're going to do. How about, we could probably do this. If you guys want to stop the recording, I'll stay here and answer every question until they're answered. That way it won't burn up your recording software. Is that okay, Becky? I mean, because an hour and a half is a little long for a webinar anyway. All right, so here's what we're going to do. I'm going to take a sip of water. I'm going to hit it again, okay? Okay, all right, cool. Just let me know. Becky. I'll do whatever you tell me to do. All right, I'm going to go until Becky tells me to leave, all right? Or, until I get all the questions out. I'll try to go through them as fast as I can. Here's the link. We'll have them turn off the software, and I'll try to answer as many questions as I can. You guys just have to be a little patient with me because you guys type them so fast. OPK. And be nice to my people when you call in an order. They're great people. OPK, really good buy set up here. You buy it, your stop's below the cloud. The lagging line's telling you it wants to go higher. Past is higher, present is support, and future, a little bit weird though. You see the red cloud here? It's going, heads up, I might change. So it's a long with caution because the cloud's red over here. How do you scan for setups? So in the class I teach you how I scan for setups. There's actually there's a free piece of software, a web browser, that you can scan to find if it's above the cloud, below the cloud, or touching the cloud. And that's in the course. CLF. CLF is a long, if it touches the cloud, get you some of it. Stop would be at the below the cloud there. Looks good. Probably going to go to 30. ACN. ACN is a long at 75 with a stop of 74, target 80. Yep, stock charts has predefined, and so does bar charts. How do I sign up? You sign up by clicking this link right here, or you can call my office, area code 859-963-3445. Area code 859-963-3445. I can hear him taking orders behind me, though. TSL, so I don't know if you'll be able to get a ticket. Oh, TSL, hit the wrong button. TSL, ooh, good little long. I would buy it around $12 at the below the cloud just to increase my odds of doing it there because it's already in the cloud and it's headed to the. Anytime you get in the cloud, I like to buy at the top of the cloud or at the bottom of the cloud. Those are the two highest percentage trades. Once you get in the cloud, it's kind of funky. It's kind of in the soup. AFOP. I thought I already did that one. AFOP is that's a good short. AFOP, the price is below the cloud, consolidating sideways, lagging line below the cloud, short it with a stop of 17.19. How much? How much what? It's $97. GOGO. Oh, sorry. GOGO. I didn't mean to type it back in the room there. GOGO looks like a good long. Support's going to be 31.04 if you trail the stop. Looks good. It's probably going to go higher, but it's just it acts weird. It doesn't have enough data to be perfect, so be careful on that one. GPI is a short. Ooh, here's a great example of a short. It's below the cloud. It got smoked to the downside and has rallied off the bottom into where? Uh-oh. Look here. Right into Mike Tyson's right cross. That is some severe resistance, right? That's a good short right there. So you would short it here, and your stop would be the top of the cloud. So you'd have to short it about right here at 68, and your stop would be the top of the cloud around 71, 72. That's a good trade. I like it. It's a good find. FXY. FXY is a little weird, but it's a short. It's below the cloud, lagging lines below the cloud, probably going to go to 90. MHR. MHR, if you're a huge candlestick fan, this is going to complement what you're doing with candlesticks perfectly. It's like peanut butter and jelly. And you can't go wrong with peanut butter and jelly. All right? MHR looks really good. It is holding itself very well into support. The cloud is saying it's going to go higher. Lagging line saying it's going to go higher. You get long at $6.97. Stop at $6. Target $8. JAZZ. Looks good. I like it. I would probably wait for a pullback at 103 to get in it, but overall it looks really well. You need it to get back above that yellow line. If it gets back above 114.97, really strong long looks really good. Peanut butter and jelly time. Peanut butter and jelly. PDX. PDX. I can't type. PDX. Dyslexic. Rearing its ugly head on me. CMG. Chipotle. CMG. Chipotle. Awesome food and good stock. It's probably going to go to 500. It's got a moving average cross, right? It's below both of them. Where's the most logical point that it will go? It will probably go here and then bounce. PXD. Almost a short. It's spent more than 3 days below here, but here's how you know that it's not a short. If the lagging line is not below the cloud, it's not a short until this blue line gets below. It's the hardest thing in the world to wait for that sucker to get below that. After it gets down there, then you can short it with some really, really good confidence that it'll go lower. I can't wait to start playing with this. Oh, thanks, Don. I appreciate it. Do institutional traders use this method? Not a lot of institutional American clients use this. Everybody in Japan uses it. All the prop firms, all the institutionals, all those guys use it. All the trading arcades. It's the number one strategy in Japan. TNA, great long. The price action's in between the little sandwich here. Wait for it to go back above 72.16. HIMX here. Looks good. So here's a good example of paying attention. It went into the cloud, went below. So you see why I like buying it either at the top of the cloud or the bottom of the cloud. And I don't really like messing with it inside the cloud. So top, buy it here. Bottom, buy it here. And now it's bouncing back out of it. Looks good. Probably going to go through $12. Lagging line likes it too. Does it work with 3 times ETFs? Yeah, throw me out one. Throw me a symbol. I'll read it for you. Is there a Thinkorswim study? It's built into Thinkorswim. NUGT is built into Thinkorswim. That is a short NUGT. That's a short. It's below the cloud. Lagging line's below the cloud. It's going lower. ERY is a short. Every time it rears its head up to that red cloud, just bop it in the head like a whack-a-mole. FAZ, good short. Every time it touches the top, every time it touches the cloud, short it. Looks like a great short. DB. It's hard on dyslexics. It's not a long or a short. It's in transition phase. Plus, that thing looks choppy as heck. I would stay away from that one. That's a tough trading stock out there. Just stay away from that one. The yen. So you mean at JY? At Japanese yen, currency future? It's getting smoked on the currency future, but that means if the currency future is getting smoked, that means that the spot FX is going higher. So you would do JPY-USD. No, you go USD-JPY. Looks great as a long on the Forex spot market. It has closed below the yellow line. The support's going to be 100. If it gets down to 100, buy it with 2 handfuls. Two fists. RAD. Looks good. I don't particularly love stuff below $5, so be careful. Support's $5. It'll probably go north of what it's done lately, 6.25. KERX. Looks like a good long here at 12.44. But if it closes below the purple, it's going to touch the blue. Cloud's a little thin here, so you got to be careful. But it looks okay. It doesn't look great, but it looks okay. IRE. IRE. I would buy it when it touches the cloud. Buy it when it touches the cloud. Stop would be at the bottom of the cloud. GDX. All right, my throat's about gone. GDX is a great short. Short it with a stop of 23.49. CRM. All right. Read Steven sign. Where's Steven? Where's Steven at? This is a good long here. It's bouncing on the cloud. CRM looks really good. Next target will be 54.68. All right. That's all I got time for. You guys wore me out. Hopefully you enjoyed it. I enjoyed playing with y'all. Y'all are fun. Here is the link. You can also call my office. They're still here. Thanks for being patient with me. I appreciate it. Thanks for giving me extra time. To some of you said you would show us one technique better. Oh, yeah. Oh, okay. Stephen B. The technique is wait for the price action to get below. Here, I'll show it to you right now. This is it right here. If the price action gets below the cloud, you have to give it 3 days below the cloud at least. And you need this lagging line to be below the cloud. That's the confirmation. It goes from 33% return to 79% return. Okay? Does that make sense? If you just go short as soon as you go below this cloud on the price action, sometimes you'll get a lagging line hook, and it'll rip your head off. So what you want to do is you want minimum of 3 candlesticks below the cloud, and then you want this lagging line to show up. You want it to follow suit. So AAPL. So in this example, when Apple was above for at least 3 days, you had to wait for this lagging line to get above there too. And then what did it do after that? Zip, zoom, pow. And here's the deal, James. There you go. The lagging line is the price action shifted back 26 bars. Great presentation. Thank you. What's lagging line? TOS, study, source code, HL. Would the bull side be just the opposite below the cloud? Yep. It works on both up and down side. Yep. Thank you for having me. I appreciate it, Stephen. Hope you get better, man. Hope you recover from your cold. Good luck. Hope it helps. Here's the link. I'll see you guys on the next webinar. Thanks for having me.